Welcome friends. Today we're going to talk about the chapter control accounts. We are going to work on a question where we are required to prepare the receivables control account, and we've also got some correction of errors regarding the control accounts. So let's take a look at the question. The books of Delta gave the following information for the month ended 31st of May 2013. And at the same time, we are told that all purchases and sales were made on credit. Let's take a look at the figures given. Opening balance of the receivables ledger at the 1st of May 2013 is at $5,000. Credit sales for the year, as precised above, all sales were on credit, so these represent only credit sales of $100,000. Sales returns, $2,000. Checks from trade accounts receivables, $93,000. Customers' checks dishonored, $1,000. Discount allowed, $3,000. Irrecoverable debts written off, $2,000. And debit balances transferred to payables control account, in other words, contra entry of $811. The total of all the personal accounts in the receivables ledger amounted to $9,400, which differs from the closing balance in the receivables control account. First of all, we are required to prepare a receivables control account for the month ended the 31st of May 2013. We have the format right here, so we start by inputting the data over here. First of all, we have the opening balance of the receivables control account of $5,000, which is dated the 1st of May, and that's the balance brought forward or balance brought down. Then we have sales for the year, in other words, credit sales for the year, representing $100,000, so we debit the receivables control account by $100,000. Dated the 31st of May, and these are credit sales. After that, we have sales returns of $2,000. We credit the control account by $2,000. Dated the 31st of May, and these are sales returns. After that, we have checks from trade accounts receivables of $93,000. These are amounts received from the credit customers of $93,000. So again, we credit the control account by $93,000. Dated the 31st of May. We can put back here the amounts were received by check, so we put in the bank details. Then we have customers' checks dishonored of $1,000, so we debit the receivables control account by $1,000 dated the 31st of May, and these are dishonored checks. After that, we have a discount allowed of $3,000. We just credit the control account by $3,000 dated the 31st of May, and these are discounts allowed. Irrecoverable debts written off of $2,000 are credited to the control account dated the 31st of May, and these are irrecoverable debts written off. And finally, debit balances transferred to payables control account of $811. These represent contra entry of $811 on the credit side of the control account dated the 31st of May 2013. We are done with all the entries here, so we can just balance off the accounts to obtain the closing balance. We have $106,000 on both the debit and credit sides, and the credit side falls short by 5,189, which represents the balance carried forward, which eventually becomes the balance brought forward for the next month. It should be the 1st of April. That's my balance brought forward on the 1st of April. Now, as per the question, we are told that the total of the personal accounts in the receivables ledger, it amounts to 9,400. And of course, as you can see, it is not tallying with the closing balance in the receivables control account. So we need to find out what are the errors that have been made. We have all our errors listed here in our question. The following errors have been discovered since the receivables control account was prepared. A sales invoice for $2,500 has been completely omitted from the books. Number 2, a page of the sales daybook with entries totaling $8,000 had been omitted from total sales, but the individual entries had been posted to the personal accounts. Number 3, a personal account balance of $4,000 had been omitted from the list of balances. Number 4, discount allowed had been overstated by $511. Number 6, an entry of $1,500 in the sales daybook had been omitted from the trade receivables account. Number 7, a contra entry had been made in the payables ledger for a debit balance of $1,200 in the receivables ledger, but no entry had been made in the control account. Number 8, a receipt of $1,200 was debited to the bank but not posted to the trade receivables account. Number 9, a credit note for $350 sent to a customer had been entered in the sales daybook and posted as a sale to both of the accounts. And number 10, a customer owing $1,600 was declared bankrupt during the month of May 2013. The debt was eventually written off in the control account, but no entry had been made in the trade receivables account. Here, we are required to prepare a corrected or amended receivables control account, extracting the relevant information from the list of errors we've been given here. And also we have to prepare a statement showing the adjustments that are necessary to the list of personal account balances so that it reconciles with the amended receivables control account. So we have to correct these errors. We have to work simultaneously with the amended receivables control account and with the statement reconciling the receivable ledger balances. The amended receivables control account should have the same opening balance as the receivables control account that we had prepared here. It means the receivables control account balance of 5,189. It becomes the opening balance here of the amended receivables control account dated the 1st of April. And that's the opening balance. At the same time, even the statement of reconciliation should have an opening balance as given in the question. So the original total as per the question is at $9,400. Yeah, here it is. So now we take each error one by one and consider the relevant corrections to be made, either in the amended receivables control account or in the statement reconciling the receivables ledger balances, or in both of them. The first error. A sales invoice of $2,500 has been completely omitted from the books. If it has been completely omitted, it means that no entry has been made neither in the general ledger, in the sales account, nor in the sales ledger in the trade receivables account. So the entries have to be made in both, the corrections have to be made in both the amended receivables control account and in the statement of reconciliation. Given that the entry of 2,500 has been omitted, so we have to debit the amended receivables control account with 2,500. These are sales omitted, dated the 30th of April. And as I said, given that the transaction was completely omitted from the books, so the correction has to be made in the statement of reconciliation as well, where we've got to add the value of 2,500. So this is my error number 1, sales omitted. Error number 2. A page of the sales day book with the entries totaling $8,000 have been omitted from total sales, but the individual entries have been posted to the personal account. It means that we have correctly credited, or rather debited, the trade receivables account in the sales ledger, in the personal accounts, but we forgot to make a credit entry in the sales account in the general ledger. So, such an error has to be corrected in the amended control accounts only. Sales have been omitted, so we have to debit the amended sales ledger or receivables control account. So these are again sales omitted of the same date, 30th of April. Error number 3. A personal account balance of $4,000 had been omitted from the list of balances. It's only a personal account balance that has been omitted. Nothing to do with our general ledger. It only concerns our sales ledger. So the correction will be made only in the statement of reconciliation. This is error number 3. We have omitted this balance, we forgot to add this balance, so now we need to add it back. So it's a balance understated. Error number 4. A customer's account has been understated by $400. Again, this error concerns only the sales ledger because the error was made only in the individual customer's personal account. So we need to add it back here in the statement of reconciliation, $400. This is error number 4. And again, this is balance understated. Error number 5. Discount allowed had been overstated by $511. Only the discount allowed account, which is found in the general ledger, has been overstated here. It's got nothing to do with the personal accounts of the receivables, so nothing to do with the sales ledger. Hence, the correction is to be made only in the amended receivables control account. Now, discount allowed has been overstated. We have booked discount allowed in excess by $511. Now we've got to reduce that amount. And how we do that? By debiting the amended receivables control account by $511 on the 30th of April. And this is discount allowed overstated. Error number 6. An entry of $1,500 in the sales daybook had been omitted from the trade receivables account. The entry has been made in the sales daybook but omitted from the trade receivables account. Hence, the correction has to be made only in the statement of reconciliation. So we add back the amount that we missed, 1,500. This is error number 6. So that's an entry omitted. Error number 7. A contra entry had been made in the payables ledger for a debit balance of $1,200 in the receivables ledger, but no such entry has been made in the control account. If we forgot to make the entry in the control account, in other words, the entry was omitted from the general ledger. Hence, the correction is to be made only in this amended receivables control account. Hence, we just credit the amended receivables control account by $1,200 on the 30th of April. And this is the contra entry omitted. Error number 8. A receipt of $1,200 was correctly debited to the bank, but it was not posted to the trade receivables account. In other words, the receipt was correctly debited to the bank account, which is found in the general ledger. So we do not have to make any correction in the amended receivables control account. But we missed the entry in the trade receivables account, which is found in the sales ledger. Therefore, the correction has to be made only in the statement of reconciliation. This is error number 8. We've got a payment omitted. And given that it's a payment, we have to deduct it from the balance of the trade receivables. 1,200. Error number 9. A credit note sent to a customer had been entered in the sales daybook and posted as a sale to both accounts. If a credit note is sent to a customer, it means the customer has returned the goods to the business, to Delta Limited. So it's rather a sales return for Delta Limited. But by mistake, we entered that amount of 350, the sales returns amount of 350 in the sales daybook. That's incorrect. And it was also posted as a sale to both accounts. To the sales account, of course, and to the account of the trade receivable. In other words, the correction, the error rather, has been made in both the general ledger, in the sales account, and also in the account of the customer, of the trade receivable in the sales ledger. So the correction therefore has to be made in both the amended receivables control account and in the statement of reconciliation as well. Now, given that this entry has been posted as a sale to the customer's account, we have to first of all reduce the customer's account by the amount of sale wrongly credited. In other words, we have to credit the amended receivables control account by 350 first of all, dated the 30th of April. This is sales wrongly posted. But now, we know that this transaction represents a sales return. So we now have to correctly post the sales returns to the amended receivables control account. The sales return is of the amount of 350, dated 30th of April, and these are sales returns, which we wrongly posted as a sale to the customer's account. And now, the same error has been made in the customer's account as well, so we have to correct it in the statement of reconciliation as well. This is error number 9. Here as well, we have to reduce the amount of sales in the customer's account. So these are sales wrongly posted, and at the same time we have to reduce the balance of the customer's account by 350, which represent sales returns. And finally, error number 10. A customer owing $1,600 was declared bankrupt during May 2013. The debt was written off in the control account, but no entry had been made in the trade receivables account. It's an irrecoverable debt, and we have correctly written it off in the control account, which means our entry in the general ledger is correct. No correction has to be made in the amended receivables control account. But no further entry, no corresponding entry had been made in the trade receivables account. In other words, no corresponding entry had been made in the sales ledger. We now have to make it. Therefore, the correction has to be made in the statement of reconciliation. So that's error number 10. We forgot to reduce the account of the customer by $1,600, so we reduce it now. And these are bad debts omitted. And now that we are done with correcting the errors, let's see if our balance, our closing balance in the amended receivables control account tallies with that of the statement of reconciliation. So we have totals of $16,200 on the both debit and credit side, and the amended receivables control account falls short by $14,300 on the credit side, dated the 30th of April. This is my balance carried forward, which will eventually become my opening balance on the 1st of May 2030. And now our statement of reconciliation. We have a total of $8,400 that we have added here, and we have a total of $3,500 that we have deducted. $8,400 less $3,500, we have $4,900, a positive figure. And for 9,400 added to 4,900 gives us 14,300, which is our new total as per the statement of reconciliation. And as you can see, it correctly tallies with that of the amended receivables control account. Well, my friends, I hope that this video lecture may have given you a good insight about how to prepare an amended receivables control account and how to prepare the statement of reconciliation. Please like and subscribe to our channel Study Buddy, because we'll be posting lots and lots of videos which will be of course helpful to you in your studies. So, being your study buddy, Mr. Sadhu, I wish you all the best for your studies, and see you next time.